All right, Mark here, and welcome to another Greenbridge Investing market analysis. Now today's Tuesday. I usually get these done on Monday, but yesterday was a little busy, to say the least. So anyway, welcome to the live stream. If you have questions during the session, please feel free to ask. If I can't address your question fully, I will address it in the chat room. Okay, so again, thank you for joining me. So as you know, I'm going to be covering Bitcoin, the major markets, and select stocks as we come into the market close today. So let's get started. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, before I actually get into the chart, I have to just run through this very quickly, the economic calendar. And we always want to be aware. Now, I know, Andrew's been talking about, the FOMC and all that stuff, but let's just see if there's any other details that we should know about going into the rest of the week. So here's the FOMC, right? The rate decision, which is tomorrow at, 2 p.m. Eastern time. That's what it says here. So that's a big market mover, right? It can be if there are any surprises. So we need to be on top of this. This is especially important if you're taking Forex trades going into this. We have a trade in the dollar franc short, so that is a aggressive trade in light of that. So we'll see how that plays out. But Forex is acting strange going into this. That's not unusual. We'll see how that comes out. Now again, if there are any surprises, we can have a very sharp range expansion very quickly if Chairman Powell says something that was unexpected. So we have to see how that goes. The markets usually behave very strangely getting into the number because volume typically goes away. All right, now anything else we have here? The unemployment rate for Germany, that can affect the euro. And I've been looking at the euro as a possible trade, but we don't have anything on there yet. We have the European unemployment rate on the 30th and the ECB rate decision. So again, this is important because again, that's going to affect the euro, it can affect the franc, and it could affect the pound. And those are markets that we've been watching for potential trades. So we want to keep an eye on that. We want to know when these are coming out, or at least know that they're out of the way. Okay, maybe they're a non-event, and that would be fine. You have the ECB monetary policy statement and press conference. Again, any surprises come out of this, it can cause movement. So you want to know about it. And then, finishing off the week, we have ISM manufacturing. I don't know if that's going to be that big of a deal. Because of the unusual situation that the markets are in, some of these news events, which normally are non-events, they can cause a movement if there's a surprise. So you just want to be aware. Obviously, we don't have NFP this week. We have it next week. All right, that's the next really big number to be cognizant of. All right, so let's get into the charts. Again, if you have any questions, please feel free to ask while I'm doing this. And if I can't address fully, I will address it in the chat room. And if you're new here, welcome. So let's begin with Bitcoin. Now, here's the thing. So Bitcoin's been acting a little hesitant, right? We got this bearish price action going on, but it's not dramatically bearish. Now, here's the thing. We are still inside of this resistance zone, okay? 7,300 to basically 8,000. And selling activity is probable here. The thing is, we may not get it, right? That's why this is not a place to go short. We don't short, by the way, but this is not a place to go short exactly yet because this can easily fake out and go higher, which continues to happen, right? You had these potential sell signals here, and all they did was lure in bears and squeeze. So this can turn into that as well. Remember this, when there is weakness in the market at a resistance, price does not linger at a resistance. It moves. It's motivated, and this price is not motivated to sell. Back here, it sold a little bit. Back here, but not here. So again, there's nothing to do here. People have been asking me, is now a good time to get in? No. All right, the reward risk doesn't make sense here. We have, there's some people that may be in from the 70-25 level, and we took our original swing trade back at that 57.5 area. So we have trades that have good reward risk. This right now, you have to wait for a pullback. Okay, so we're looking to partial out, and we're looking for this thing to go to our targets, right? We're not putting on more risk here. So that's Bitcoin. Nothing to do but let the trade play out. All right, let's move into the stock market here. Now, the stock market had an interesting day. Earlier, it was acting weak, right? Hold on, where's my stock market? Here it is. So I like to look at this. This is the Nasdaq 100 CFD. It's a nice reflection of the futures. And, we had this is like a mixed day sort of, right? Because it broke the previous day's high and it took out the previous day's low. And it's also an outside bar and it's bearish and it's a pin bar. So it's in a resistance zone. It's been here for a while. Same situation as Bitcoin, but this is a little bit more pronounced in terms of selling action, right? This could be a turning point, especially since it's a potential double top in a resistance area. So what does this mean? This means hopefully you've partialed out of your stocks and you've taken profits along the way. Hopefully your risk has been reduced because this is setting up for a pullback. Now the question is, how far does it pull back? Hey Scott, how are you? Great, thank you. The question is, how far does this pull back? Could this fake out? Maybe this will pull back kind of like this pullback here and then find a minor higher low and reverse again. That's very possible, but it's also possible that we take out this low here at 83.81, that area right there. We close below that, then we have a confirmed double top, which opens, the possibility of now touching the trend resistance, support at the 8,000 level. Okay, so if the market gets back to that 8,000 level, I'm very interested in buying quality stocks. But right now, with this outside bar and this bearish situation, we're going to close in 20 minutes. We close like this and we take out the low tomorrow. That is not exactly a good location to be buying more stocks. Now, yesterday and Friday, we were talking about taking small bites on all these breakout stocks, and that's great. But now we have a market that's not exactly cooperating. So that's why we always emphasize the small bite, because if this market pulls back, now you won't get hammered in that small bite. Okay, and we have to see what the market does. We can't make a judgment and say, oh, this thing is going back to the low, and we're going to have we're not going to have a V bottom and all that. We can't be opinionated like that. We have to let the market do what it has to do. So our potential levels are this low over here, all right, which is that 84 and a quarter area, right? So we could maybe get a double bottom there. If we clear that, then we're looking at 8,000, and that's the next high probability area for a bullish reversal. And those are the inflection points to add to your winning stocks, okay? Stocks that have been showing a lot of strength and that have been performing well during this environment. Keep in mind, we're still, that stimulus, all that stuff that's going on in the world, that's still gonna take effect. Now, stocks are coming out with their earnings. Earnings can also have a major effect on how this thing plays out, if there are any negative surprises or maybe positive surprises. So we have to keep that in mind. Just keep these levels in mind, because these inflection points are where we're looking to take action if the market cooperates at those levels. At this point, there's nothing to do unless you're looking to short a CFD. Like now would be a good time to look at the IWM or the Qs as a possible short on the CFD side. Okay, so we'll keep that in mind. Anyway, all right, I don't want to overdo it on this. Let's go on to the DAX very quick. Now, the DAX looked interesting. I was looking at it before, and I like to go over the DAX because we have quite a few people in the Eurozone here. And even though the S&P and the Nasdaq are having some of a bearish reversal type of day, the DAX is shrugging that off, which I don't trust something like this. The DAX is never a leader. Okay, I'm sorry, people in Germany. But the DAX is not a leader, it's a follower. And if the S&P and Dow and Nasdaq pull back dramatically, this is not going to continue higher on its own. It's just not, okay? What I should say is it has not demonstrated that type of relationship yet, okay? Maybe at some point it'll change, but until it does, I would be very suspicious of a breakout like this. This is more likely to fake out. And I would not be, buying this thing. I would be looking, hopefully you're out of your European denominated assets, or you've taken profits off the table, and now, watch this thing for a pullback with the US market if that's what the US market chooses to do. Don't be fooled by this. All right, let's move on to oil. Now, oil has been very interesting. People have been very interested in buying oil. And on our podcast yesterday, we talked about like USO and OOO, which is the equivalent, I believe, in the counterpart in Australia. And those ETFs or ETNs or whatever they're called, they're a bad choice because of the costs that they incur with the type of instrument that I guess that they've put together with the different stocks that are involved in those instruments in the USO or OOO. So avoid them. All right, they're going to struggle in this, especially with oil looking like this. The best way to get involved in oil when oil turns is probably the CFD, which you can do through any CFD broker. The one that we use, MyFX Choice, they don't charge a swap, so that's nice. You can hold on to the position and not have to pay interest on it. Now, at this point, though, although oil is in a location where you would think long is a high probability, we haven't got any structural confirmation. This may turn into a double bottom, but it's very small. Okay, it's small meaning you see the span of time from this low to this potential double bottom. There was a lot of time, but there's a lot of candles, and it's a very large pattern, right? This is a very small pattern. So that actually means something. That means that this double bottom doesn't really carry much weight if it does develop. We need to see at least a takeout of this high, which is at 1489 area. We need to see something like that before we have some confidence that oil is stabilizing. I would not touch this thing long. It's possible that this thing could go below 10. I mean, anything is possible. So step aside on the oil. Don't judge it prematurely. And yes, in the bigger picture, is it ridiculous that oil is at $10 or whatever? Sure. But you have to let this thing stabilize. So that's the idea with that. We're looking for longs, but just until we see stability, we're not going to do anything with it. All right. Shorts also, shorts, if you're day trading, okay, you can get away with it. But you have to be very careful on the short side because it is a potential that, that has a lot of interest for buying. I don't care what the fundamentals are. I know there's all this oil glut and all this other nonsense. I understand. Hey, no problem, Nicholas. But just don't let those opinions cloud your decisions. The price structure and the price action is really the reality of the market, and that carries a lot more weight than all this economic and all this other fundamental stuff that's going on, because price reflects the reality of what's changing that you can't see. By the time the news reports it to you, it's old. So price is telling you what's actually happening in the moment, and that's what we need to pay attention to. So that nothing to do here, okay? I know I like to talk a lot. You have to stop me. All right, let's go into, let's take a look at, what was the next one on my list? The franc, because we're in this franc. Now, the franc is basically the opposite of the euro. All right, never mind these lines on this chart. I have to update those, so just ignore the horizontal lines. But what we want to pay attention to is this pin bar. So the dollar franc and the euro dollar are inverse. They have an inverse relationship, right, based on the US dollar. So if the euro is a long, the franc should be a short. And that's what it looks like is developing here. We have this nice bearish pin bar at a resistance level, all right? So this makes sense to be short. Now, again, this is very aggressive going into FOMC meeting. But, we took the trade. It's a 1% risk, and that's that. So what we need to see tomorrow, hopefully after the meeting, is we need to see a close below this low, which is 97.20, right? We need to see that, and then that trade should be in good shape. But right now, I think it's in the red, all right? I think that, I forget where the trigger was put exactly because Andrew sent that out. I didn't send that one out. The stop's going to be way up here. You're looking at a wide stop, and the targets are going to be between this low and this low here. So this potential, right? So it's a great position. It's a great location for a short trade, a swing trade short, and we're going to go into the FOMC meeting with it. Yes, it's risky, but we only have 1% on, so we're going to play that, the location, everything there. The setup is there, everything is there. So we follow the rules. Now, that's the franc. Now, here's the stock. I want to talk about the one stock that I mentioned earlier in the chat room. Michael had asked me about it, and I talked about it on the podcast yesterday, and that was Urban, okay, Urban Outfitters. And I really like this stock. I mean, look at this thing today. So I talked about it. We talked about it at the podcast yesterday because of this move, right? We have this beautiful higher low off this 15 area, right? Nice pin bar, all that. Broke out yesterday. And is this chasing it? Well, not necessarily, because here's why. the next resistance is up in here, okay, around that 1930 area, whatever, 1950 area. And looks like we're closing strong today. Now, for those of you that are new that missed it, this is the trade idea that I sent out earlier. At the time, the stock was at 1750. It was around there. Now, if some people bought it slightly higher than 1750, maybe 1760, I mean, your reward risk is not going to change that dramatically based on these targets and stop. Okay, so it's not a bad idea. Oh, nice, Michael, nice. Actually, I put this together for you because you asked for it. So that's the actual trade idea that we shared in our chat room. We didn't send it by text or by email because it was very fast, and really it was just for the chat room. So that's it. It's also going on our trade record because I believe Andrew put this trade on as well. We're very clear when we don't take these trades. So we're in this one. Anyway, so we like this nice close, right? Nice close. Oh, great. Nice price. We got it at the worst price, but that's okay. The momentum is in our favor. Now, keep in mind on Urban, we have the cooperative price structure, right? We have the double bottom that occurred weeks ago. Great. We have that initial push higher. Great. Now we have the higher low in place, confirmed. Great. Higher lows typically lead to higher highs. That's why if you notice, I put my first target around that 1950 area because that's the breakout area. And that's typically where all the retail traders are going to jump in and start piling into it. And that's where you can get that first fake out. And we like to sell into that. So that's why, I would like to reduce risk in that area. And that's the plan. And if it squeezes nicely and the market cooperates, then, the potential to reach these other targets becomes increased. Now, keep in mind, the market needs to cooperate. The good thing about this situation right now, Michael, is the market is acting weak right now. It's not acting that great. And this thing is shrugging it off. All right. That's relative strength. So if the market holds up or if the market fakes everyone out and we don't get the sell-off in the Nasdaq, then this thing should be in good shape. If we do get the sell-off in the Nasdaq and we get that more pronounced pullback, which is possible at the current levels, because remember, when you look at your individual stock, you have to look at your broader market as a timing gauge or as a gauge of relative strength. So if that thing sells off, it's going to put pressure on this. Right? And that's where, we're going to have to see how that part plays out. But right now, this looks good. And as long as the market cooperates, it should be in good shape. So that's that. Now, does anyone want to see a stock? I have a couple of minutes here. I'll run through another stock real quick if you guys want to mention one. We have like less than 10 minutes here before the market closes. Is there anything you'd like to see really quick? Because if not, I don't think I have anything else to mention right now. Anything, you guys? Let me look at my stock list. Maybe something will pop out because this is the one that I prepared for. Oh, well, I could talk about the pot stocks because, those stocks, what a pain they've been in. Okay, sure. Broadcom. All right, Michael, no problem. Let's put that one up. AVG. I know we have something going on with that too. Andrew keeps track of these. I'm more of like the CFD futures Bitcoin person. So, all right, this I'm not, I've never been a big fan of this stock because it's just so expensive. Gold. Okay, I'll jump into that real quick too. So here's the thing, Michael, with this AVGO, it's kind of having a hard time. This is very sensitive to the Nasdaq, by the way. Okay, and it's looking just like it. So this could be a failed high, and this could be preparing to pull back. If that Nasdaq pulls back in a more significant way, this thing is probably going to go with it. And it's probably going to offer a better buying opportunity. So that's what I'd be looking for here. I wouldn't be buying it on this candle, that's for sure. So it's got some room to rally, but we need support from that Nasdaq. The next support on this thing is at basically 247, that area there. So I'd keep an eye on that price if we pull back. Okay. The best case scenario or better scenario is the market fakes everyone out on the bear side. This thing gives you a higher low and it pushes higher. Again, you need the Nasdaq to lead this thing. All right, the next resistance, by the way, on this thing is around 298. This thing's a mover. All right, so hopefully that gives you an idea there. Now, some people want to see gold. Let me jump into gold. What's the ticker on Barrick Gold? I don't know the ticker offhand. If you could just type in the ticker, maybe if I just type it in. Let's see, will it give it to me? No, I have it because I don't have stocks up here. Oh, here it is. Oh, just gold. Okay. I got it. The internet. Got to know how to use the internet. All right, so here's Barrick Gold. All right, look, here's the thing. So gold, why does it say CFDs on gold? All right, I thought this was, hold on. I thought I had, maybe I'm supposed to pick the symbol. Hold on a second. Where's Barrick Gold? All right, well, here's the chart that I have. No, that can't be right. That's in a different currency. Hold on. I'm gonna get it. Barrick Gold, US, right here. NYSE Gold. All right. $27. That's it. All right, here's the thing with these. Wow, what a move. This is obviously going to follow gold somewhat, and it's hesitating up here. You don't buy things like this. Not at this price. You got to wait for a pullback, right? You got to wait for some red candles and let them go green at least. And where's the next area where that can happen? 22. So you have some room to pull back here. Gold is a little wild, right? Now, I don't know if it'll go all the way back to 22. It may not make it that far. That's an old resistance. So that is likely to be a new support. You may get some price action earlier than that. You may get that inflection point a little higher. So this is definitely strong. Gold is obviously strong. And we're looking for higher highs in gold, especially in light of the situation. Yeah, XAU USD, that's the CFD. That's what we pretty much, we're involved in that a lot of times. So if I take a look at that here real quick, the CFD right here, XAU, I mean, it looks very similar, right? Looks just like it. So we have the bullish pin bar, but you have this double top. It's in a conflicted area. I'd prefer if gold pulled back a little bit more and tested this old high, which it tried doing that once around that 1680 area. Try doing that. So I would wait until at least you get an inside bar or some sort of green candle, or at least a break of this high, something bullish. Okay, the pin bar is not enough. 1716 is the high of this pin bar. I'd like to see an inside bar, just something to confirm that other buyers are getting involved. This can obviously turn into a consolidation and just break out higher. I would not short gold. I'll tell you right now. I would not short gold. That's just a bad idea. So that's the deal there. You get the breakout and close above these high 17s. This thing is going probably to 1850 or higher. Would I close the gold trade early? Well, at this point, I wouldn't. If it gives us a hard time and it gives us some sort of confirmation, we talked about the sell signal. I talked about this. I put this in the chat room yesterday. And yeah, there's a sell signal. But here's the thing, Bella, we're not getting follow through. This is lousy follow through. If I was short gold and I see this bullish pin bar developing after I open that short, I would be like, man, this thing is no good. Okay, because we shouldn't see a pin bar. Hey, no problem, guys. That's what I'm here for. So I'll put in the extra time. I don't care. I want this to be valuable to you. So I just try to make them short because then Andrew gets mad at me and says they're too long and people get bored. So this is a sign of strength, but it's not confirmed. I'd hate to be short if it looked like this. Okay, if I was short. So I would hold off on. I wouldn't get out. I wouldn't exit this thing early. This thing is generally strong and fundamentals are behind it as well. So you have to keep that in mind. There's just so many reasons to be long. Just be patient, let the noise play out. And if it starts to break and give us like more of a sell signal, for one, if anything, it needs to clear this support right here, the 16.5. What is that? 1665. It needs to close below that at least. All right, before we do anything. So that would confirm the double top and all that other stuff. And even then, we'll be like, well, let's see, because gold is in such a strong situation. So that's pretty much where we are with that. All right, so I hope that helps. Do I have any other questions? I don't want to make this too long. The webinar that I did on Sunday was 2 hours of me talking. I don't know why you guys didn't stop me. I talk way too much. So I hope you found that useful too with the day trading stuff. Anyway, do I have any other questions? You want me to cover anything really quick? If not, I'll just go over stuff in the chat room if I can't follow up here. I hope you guys found this helpful. Again, any questions in the chat room? And thanks for joining me, and thanks for contributing some ideas here, some stocks we can look at. I want to try to do this more regularly where you guys can just give me stuff to look at and we can run through them real quick, okay? All right, so the market's closing here in 2 minutes. I'm going to wrap this up. Have a great day, everyone. and I'll see you tomorrow. Take care. Bye.